Hello and a very good evening to everyone. So going to take a recap of what's happened during the US session today. So firstly, that FOMC rate decision projections and press conference from Ben Bernanke. So very unsurprisingly, they kept the rate unchanged. However, we did see an extension to Operation Twist. This was largely expected by markets. However, in terms of detail, the Fed said that they're going to extend this to the end of this year with a size around half the size of the last announcement, so of $267 billion. They haven't changed the maturity brackets at all, so that remains the same. But markets were disappointed somewhat with no mention at all of QE3. So equity markets came under some selling pressure, and we saw a move higher in terms of the dollar index, and we also saw quite a bit of strengthening in terms of the dollar. Now, we then had the projections from the Fed members, and we saw that in terms of the rate, they remained largely unchanged, so forecasting or reiteration that they see exceptionally low rates until late 2014. However, there are now two new Fed members, so in addition to those projections, two more seeing it later on in 2015. Now, in terms of the forecasts for growth, we saw a cut for this year and next year, and we also saw them raise the forecast for the unemployment rate, so not particularly great there. Again, just adding to a bit of disappointment in the markets. And we also saw Ben Bernanke. He reiterated pretty much what we saw in the headlines earlier on. Markets just coming under some slight selling pressure as he suggested nothing new and no new announcements out of him. So the main points there are just that the rates are to remain exceptionally low until late 2014, an extension of Operation Twist, and he didn't make any mention of an expansion to purchases of MBS. So despite this selling pressure, we did actually then rebound slightly on the back of comments from ECB's Van Rompuy. He said that a Euro blueprint was going to suggest issuing shorter dated bills, so Euro bills, and also they're going to debate a debt redemption fund, so we saw some optimism back in the markets on the back of this. They're going to be discussing this at the next ECOFIN meeting, so that's at the end of this month. And we also saw a Financial Times report, so that's the Financial Times of London. They were quoting ECB's Kerr. He said that the bailout funds should be used to purchase sovereign debt, so this would help ease the tensions in terms of Spain and Italy in particular. He also said that cutting of the ECB rate is likely to be discussed at the next meeting in July. This is not too out of line, however. We have seen already sources saying that the majority of the ECB Governing Council have already indicated that they are more willing to see a cut and a lowering of the interest rate and also deposit rate as well. So they're the main events that have happened this afternoon. As already noted in the earlier video, we have seen a government coalition formed in Greece, so that's quite interesting and will be interesting going ahead. Again, they still have to press forward those austerity cuts and measures in order to receive the next tranche of aid. But just looking ahead to tomorrow's session, in terms of data, we've got initial jobless claims and continuous claims, so those weekly numbers. We've also got existing home sales and the Philly Fed number. In terms of fixed income, there's quite a lot going on, quite a bit of issuance out of Europe. We've got Spain looking to sap 3 different lines, raising between 1 and 2 billion. France are looking to raise 7 to 8.5 billion in 4 BTANs, and also they're looking to raise 1 to 1.5 billion in OAT linkers. We've also got the US with their 30-year TIPS auction and their 2 5s and 7s refunding announcement as well. But for the time being, that's enough from me. We'll have a look forward for you tomorrow morning, but in the meantime, have a very pleasant evening and a rest following that FOMC rate decision.